Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters Podcast. I am going to talk to Mr. Sam Wilson today. Sam is an active investor in self-storage, parking, multifamily, RV parks, and of course, single-family homes. He also hosts a daily running show. I'm emphasizing daily. I was just talking to him that it's a hard work already doing this weekly, but he hosts the How to Scale Commercial Real Estate podcast, where he interviews real estate experts to give listeners the tips, tools, and tricks to scale their investment portfolio. Welcome, Sam.
Thank you, Alpesh. Glad to be here.
Absolutely. It's my pleasure, Sam. So, Sam, tell us something interesting or funny about yourself.
Yeah, so I don't think I find myself neither interesting nor funny, but I'd say something recently that's been interesting is we call it Just Add Water Family. So we went from 0 kids to 3 kids on February 1st. With a 5-year-old, a 3-year-old, and a 9-month-old. So I am a newly minted and very, very tired foster parent now for an unspecified period of time. And
congrats. Congrats for doing that. And I'm glad that you did this. It's amazing, being a parent. And I know it's hard, but yeah, I'm glad that you jumped.
Oh man, and jump we did. It really happened in 30 minutes. They called and said, "Hey, we've got 3 siblings," and we signed up for a sibling group. We said, "Sure, we'll take
makes sense."
Yeah, because we don't have children we can't have children of our own. They said, "Hey, we'll take we said we'll take a sibling group," and 30 minutes later, we had 3 kids in the house, and it's been a learning curve.
And thank you for doing this. We got to take care of those kids, right? So
Absolutely.
Someone's got to. This is amazing. I don't know if I'm pretty sure you know Whitney Sewell.
Yep, sure.
And he's big into this as well. I may be wrong. I think he has 5 kids or something. I may be wrong. But when I interviewed him a year ago, I think that same month he was trying to adopt.
Yep. Yeah, Whitney and I have spoken about this in the past, of course, and it's certainly something that it's big on both our hearts. So it's redemptive, but it's exhausting. So
oh yes. No, that's great. So when and why did you start investing in real estate?
I always say that story is a little unique for me, and that I always say that it was the good Lord having mercy on an idiot. And there is truly a lot of that, but you've also heard the phrase that luck is when preparation meets opportunity, right?
Absolutely.
So there's 3 things that I have found that you must have in order to launch anything new. One is you need to learn, right? You must understand, you got to understand what it is you're getting into. So the first step's to acquire knowledge. The second one's to take action. And the third one's to build a team. So what happened for me in real estate was that I'd sold a business in Indiana. And I headed south. My wife and I had moved to Tennessee, and I had no idea what to do with my life. I mean, I don't do well without a plan, or, I don't care if it's a bad plan. I just have to have a plan.
Right.
And so I was panicking. This was 2013. We had money in the bank and we had time on our hands, which the confluence of those happens almost never.
Right.
So, I mean, why didn't I just kick back?
Agree.
Kick back and be patient and figure it out. But I couldn't do that. I was panicking, looking for my next thing, because I just kept thinking, oh my gosh, someday we're going to run out of money.
Right.
And one day I was sitting in the office drinking coffee, just kind of trying to figure out what I was going to do that day. And I saw an advertisement for a newspaper notification in the forget what section of the newspaper it's in even now, but an advertisement for a potential foreclosure auction that day. I saw the address. I said, hey, that's interesting. And I drove over. It was about a mile from the house. Drove over, saw the house. I'm like, no one lived there. And between you, me, and everybody listening to this, of course, I found a way into the house. It was unlocked, and it was up to your waist in trash. But I had a background in construction, so I looked at the house, and that's where the knowledge part comes in. I already knew what a good house looked like. I'd spent my whole life on job sites, so I looked at this house and I go, "It's a nice house. Like, great bones here. This is hardwood
Yeah.
floors. They look like garbage, but I mean, again,
Yeah.
I don't know how many dumpster fulls
Nothing
of
you can't
trash.
fix,
Yeah,
right?
nothing we can't fix. And I had no intention, before drinking coffee that morning of getting into real estate. Had never thought about it. Never even said I want to do real estate for a living. And so, long story short, is that I took action. That's the second part of the plan. 2 hours later, I'm at the courthouse steps buying a house. I bought the house that day. We flipped it, made a bunch of money on it. I said, man, if I can do this once, I can just keep doing this. And
Right.
so, of course, then building out the team, and I didn't have the team at that point, but, we found that team pretty quickly, from realtors to general contractors to, trash out guys to, and that carried me all the way through single family, all the way through really the beginning of 2018. So that's kind of how I got into real estate.
That's great. So, and I know when you and I chatted, you mentioned about parking lot and garages, and that's what intrigued me more. So, what was your first parking lot or garage investment?
Yeah, so that came, and that's when 2018 happened. And the reason that we shifted was a couple of things. One, and this is hindsight, of course, but I thought the housing market was hot in 2018. I'm
Yeah,
like, gosh, this is overheated. This doesn't make sense.
tell me
Also,
about it.
yeah, right. But I mean, a couple of things were happening there, and we'll get I'll answer your question eventually. But everybody was getting in. Single family is the easiest place to start in real estate, and so you don't want to be competing with everyone else in the same asset class. That just gets margins became thin, risk went up, right?
Right.
And so as those two things were happening, it's like, gosh, I got to get out of this. Also, I called it running an adult daycare. I mean, anybody who has, had 5-10 flips at a time going on, that it's just nothing
Yeah.
but contractors and their problems, and their
Right.
problems are your problems. I was looking for something else. Met a gentleman at a conference that was an investor in parking lots. And I said, hey, I love what you do. I want to learn from you. Right. And I'll do whatever it takes to learn from you. I love your model. I love the idea of parking being a very no toilets, tenants, or termites.
Right. Like
Very
self
little,
storage.
like self-storage, but even better because there's not even a
Yeah.
building. I mean, unless you're
Nothing.
buying a garage, right? I mean, a
Yeah.
garage is a different animal. That's a different animal, but a surface lot, no, there's nothing to it. I mean, we always joke, we say, what is it? It's asphalt. What's it going to do? Flood? We'll just wait till the water goes down.
Right.
I mean, there's little risk in it. So the first
Yeah.
lot we bought was a 19 space corner parking lot. And this is a cool thing about parking is that it'll blow your mind sometimes what revenues a small, like I think it was a tenth of an acre, and we paid $1.2 million for it. I mean, it's a
Wow.
little corner lot, right? A tenth of an acre, but it threw off, what did it throw off? $150,000 a year, triple net.
Nice.
I mean, it's like,
Yeah, and doing nothing. That's the main thing, right? You don't need anyone.
your phone will never ring.
Yeah.
I mean, you get an ACH into your account once a month. Hello.
Right.
Like, that's the kind of business I wanted to be
And
in.
triple net, so you are not even keeping an attendant or anyone on site, right? To collect the
Correct.
space rent or whatnot. Wow. Okay.
Yep. And part of that is how you structure that. I mean, not every deal is triple net. Not every
Right.
deal is unattended. Not every deal. I mean, but the you can get into the nuance on that. But that was that particular deal, and it was it was a lot of fun.
Oh, that's great. So, how is investing? And you kind of answered that, but I want to talk even further. How is investing in parking lot or garages different from single family to apartments? Like from
Yeah,
finding the deal to underwriting, and of course managing.
right. Yeah. I mean, we could talk really, this is getting more into the nuance of how parking operates. So drawing the differences might be a little bit harder, but let's start with long-term leases are generally not a good thing in parking, right?
Okay.
Like in a multifamily property, you want a 12, 24 month
Right.
lease,
Yes. Single
right?
family everywhere. Yeah.
Yeah. The
You
longer
want
the
it.
lease, the less money you're making in
Yeah.
parking. Like you want lot turnover,
Ah.
right?
Okay. Okay.
You want that lot, and that was that lot that we had there in Houston that was amazing because it was $20 to park. People went to whatever building they were going into for 15, no, not 15, maybe an hour and a half.
And
And so
then
this
they
lot,
turn
and
over.
then they come out and they take off. We were the closest lot to the front door of that building, and it just
Ah.
turned all day long. And so seeing an opportunity, just said, all right, that's $20 to park. Okay. Well, people don't care because they need to get in and they need to get in now and they need to be close. So they were willing to pay it. So yeah, long-term leases are generally not a good thing. Let's see, whatever. I mean, the other things is you don't know who your customers are. That's changing with apps and things like that, where you get to, download data and figure that out. But there's no leases to underwrite. There's no, maintenance to take care of. There's no toilets. There's no termites. We talked about that. There's really, one of the things that you might not get in a parking lot, surface lot, because it's mostly land, is very little depreciable assets.
So there
So
is no depreciation. That's a
yeah,
huge one. Right.
very little depreciation. So what you see is what you get, and you will be taxed. You can depreciate maybe, curbs, or you could depreciate your machines or depreciate signage. I don't, what all you can get into. I'm not a tax accountant on that side, but either way, there's not a lot of ways to offset the income, which is a little disappointing. Let's see, what else is there?
But
I don't
that
know.
tells me, and sorry to interrupt, but that tells me this could be a good investment when you are investing in a syndication, multifamily, or something else. Because a lot of time we get those 100% bonus depreciation benefits, right? So investors don't have a way to utilize that loss, right? The passive
Right.
loss, and they have to carry over. But if I'm getting a solid income stream from investment like this, I can, pretty much nullify that, gain.
Right. Yeah. And again, I don't know how the nuance of that works, but I'm going to run with you on it and just say yes. Um, I would think that that's possible.
Yeah, and I have done it on my other investments like this, and that's what I try to combine, so that, if I'm getting a $50,000 loss this year, then the same year I want to make sure I have enough passive income from other investments.
Right. Yeah, absolutely. Yeah, you want that to zero out. There's no doubt. I didn't know if you could do it across investments or it had to
Oh
be
yes,
inside
oh
the
yeah,
same
you
deal.
can do like any kind of investment. So
Got it.
that's why a lot of people put even money in oil and gas, even though it's risky. It's very risky, but it's they call it as PIG, passive income generator. So if it works, you start getting royalty or payment every month, and now you can pretty much not pay any tax on it because you have investment in mobile home park or multifamily, etc.
Right.
So no, that's interesting. And sorry, I interrupted you. I know you were talking about.
No, you're good. Yeah, I don't know where we were going with that, but that's some of the key differences there. I would say, and maybe the other thing is that there's not generally the upside that you're going to find in multifamily from
Okay.
appreciation or from. I mean, it can happen. So, but let's talk in the sense of a surface lot, like an irregular shaped surface lot. If it's irregular and it can't be redeveloped, because the value in these lies in that they're generally in the central business districts. There's not a lot more land in a lot of these places that you can build on. But if your lot is oddly shaped or something like that, then the redevelopment potential goes away, and then the value of that property really stays only as a relative to what net operating income it makes. Whereas the upside in um, and of course that's true with multifamily as well. But my point there was that the appreciation in these lots only occurs really the strong appreciation only occurs in its ability to be redeveloped. It's a covered land play, basically, which is different. Obviously, you can drive up multifamily revenues in other ways, and again, that is valued also on the net operating income, but it's just a different animal. For a surface lot to be redevelopable, it has to be a certain size and shape generally to make that a potential. Otherwise, it's just a parking lot, and that's what it'll always be.
Now that also kind of it makes sense, right? Because in multifamily and all, of course, you need a roof to stay, right? And a lot of time we do value add, right, or new construction. But in the parking lot, as you said, there is not much to construct, right? There is no value to add.
Not
So yeah,
really.
no,
There
that
and there is value to add. I will say that your value add components in these are different. I mean, restriping the lot, repaving the lot, putting up better signage, cutting new curbs, doing things that make the presentation of it, adding lighting, something. I mean, those are all kind of value add things you can do. In a lot of times, actually, the strongest value add you can find in a lot of these deals is renegotiating the lease. especially if because it's a fragmented industry. I got a few kind of top level industries I can think of that are very fragmented, and by that I mean that it's still mostly, mom and pop legacy owners. It's owned by, and it's becoming more corporate, as everything is, but it's still a lot of just single owners around the country, or maybe they own 2 or 3 lots. But with that comes a lack of professionalism to management of these properties. So they don't know how to negotiate good leases. So, that's a common, and I'll call it value add. It's not really value add, but
I see.
it's a way of increasing the value of the property, is by just simply going back and shopping leases. Because a lot of your legacy owners just, oh well, they've been paying us that for 18 years. Sure they have, but maybe it's time to look at that, with fresh eyes.
Okay, no, that makes sense. Thank you. Where do you find deals for parking lots? Like I know multifamily, I go, let's say Crexy, LoopNet, or connect with certain brokers. Same with self-storage, liststorage.net, etc. But what about parking lot or garages?
Yeah, there's no database on this. That's the beautiful thing of it. I've always said that you can find opportunity where no one else is looking, and yeah, there's no database on this. If you want to find a lot, you're going to have to go to a town. I mean, this is exactly what I did. I would go to a city. I would take my bicycle with me. I'd take it out of the trunk, and I would ride the city in a grid pattern back and forth, because driving, you miss lots. You'll
For
miss.
sure. Yeah.
Yeah, I mean, because they pass so fast, like, oh no. So you had to be able to stop, and I'd mark it on my Google map, put a star on it. And of course, then my VA would get my starred map of that city and start doing all the research, on the owners of that property. Of course, then we'd, look up the LLCs, find the members of the LLCs.
So same way.
Same way. I mean, it's the same way as you find it. I
Yeah.
mean, you could do the same thing with apartment complexes.
Right,
I
right.
mean, it's just a different,
But you're
different asset.
right. You can drive around for a single family or an apartment, but not for a parking lot. I didn't think of that because you literally have to make sure that you don't miss.
Yeah, because I mean, especially in these central business districts where you've got, the lot lines can be like the 1/10 of an acre we bought. I
Oh
mean,
yeah.
can you imagine trying to find that on a
No.
GIS map or something else? You're like, wait,
No.
hang on, there's a lot of squiggles here. Which one
Google
is
Earth.
that
Yeah.
exactly? And then you can just pass those. So you've got to mark them, and you got to mark them really well. And the other thing is that the other way you find them is really just finding ones that are already paid parking. I mean, you're not going to reinvent the wheel here. You're going to find a seller that is just ready to turn loose of the asset for whatever reason, and building new parking, things like that. That's a lot more spec. You've got to know where you're going with that. But if you're getting started in this, that's exactly where I'd start.
Oh, that kind makes sense. And I think we already spoke about value add. There is not a lot to do. What are some of the gotchas for someone like me who is looking into parking lots?
Sure. I think your biggest risk is the biggest risk you have in any asset class is, why does somebody want to stay there? Why does somebody want to stay at your
Yeah.
apartment complex? Why does somebody want to stay at or park at your parking lot? What is the demand generator for people coming there? And especially in parking, if that dries up, which we can get into, we'll talk about this here in a little bit, kind of how this, 2020 has affected parking. But if that demand dries up, then you have no revenue, and no revenue means that's a bad thing. You
Right.
still got debt to pay. So that's one of the big gotchas, is that you've got to know why people park in this particular lot, and you've got to go at several times of the day. So I got a video on YouTube that kind of explains some of this, where I look at several different lots here in the city of Memphis, one of which is on a street corner that I love. The guy still won't sell it to me. I'd love for him to sell it to me. But literally 200 yards away is another lot that I wouldn't give you $5,000 for.
Wow.
I mean, no one parks there, not a soul. And the one that I want 200 yards the other direction is jam packed.
That is
Or
interesting.
conversely, there's a lot that is Monday through. And this is on all these 3 different comparisons are on the video. But there's another lot that is completely empty Monday through Friday. Well, was until 2020, but we'll keep it. Coronavirus aside, was completely empty. But then on Friday night, man, that place packed, 3, 4, 500 cars in, and it just churned all weekend long.
Nice.
But you had to go at 8 p.m. Friday night to see the lot to figure out, hey, there's actually activity here, and the owner of this lot's making bank. So we just need to figure out what your demand generators and why. So that's one of the biggest gotchas.
No, yeah, I think it does make sense. And also, I have another question because we are moving into Uber and the Lyft economy, as well as self-driving cars, right? So, what do you think is the future of parking lot? Of course, it depends on the neighborhood and area. Like I live in San Francisco Bay Area, so of course Uber and Lyft are used a lot, right?
Sure.
But it may not work in the other, rural or even urban areas, right? So what do you think?
Yeah, several things on that. One is that Uber and Lyft still has to park somewhere. So even those drivers have to park. Driverless cars at some point will have to park.
Right.
Thirdly, is that going back to my comment earlier, is that if you're buying the right parcel, it is a covered land play. So what's the worst thing that's going to happen to this is that you sell it to somebody else and they redevelop it. So that I mean that's kind of the ultimate end game, I would think, in parking. Not necessarily. I mean, if you're making great money and it's passive and easy, keep doing that. But if it's land in a central business district where people are paying to park now, someone's going to pay to build something else on that in the future. So I don't see that risk necessarily, or I don't see that being as a risky part of the business.
And have you seen anywhere that the maybe the parking lot is not working out and it's getting sold and being converted to, let's say, multifamily or self storage or
Oh
something?
yeah. Oh
Okay,
yeah. Oh
so
gosh,
that
yeah.
happens.
Oh yeah. I mean, and for whatever reason, it just seems that most large cities hate surface parking lots. And
Right.
so yeah, and so they are happy when those get redeveloped and push those permits. I mean, gosh, I just think back through some deals in Denver that we were looking at, and before we knew it, it's like, oh wait, that's now a multifamily or some high rise, something else. So yeah, that happens frequently on buildable lots for sure.
Or even converting it to, let's say, if there is demand, 5-story parking lot,
Right.
right? Or
Right.
garage, I mean, sorry.
Yep.
Oh, that's awesome. So can you share some tips and tricks on parking lots if we missed anything?
Yeah, I mean, not necessarily. Again, I mean, you kind of heard my strategy for finding them. I mean, they're right there in front of you. You just got to open your eyes and go find the owners and just start calling and seeing if you can get somebody to talk to you and start making offers. I mean, that's it's a pretty basic game, and that's it. Yeah, get your bike, get your car, pick your city, and go make your map and knock it out.
That sounds great. And do you own any lots right now? Why or why not? Or are you looking to buy?
Well, yeah, great question. I don't own any right now.
Okay.
We sold in January of 2020,
Okay.
which
Perfect
was
timing.
perfect timing. We had, and again, this is the good Lord having mercy on an idiot. We passed on a $10 million package deal that came to us that was beautiful. And we were about to
Ah,
close on it. And I actually had a lot of things in the works, which, we didn't buy any of that. So kind of got avoided some major catastrophe there, because, and this, we can talk about this, we alluded to this earlier. What happened in 2020 was obviously, who's going to ball games, who's going to the bars on the weekends, who's going to
right.
concerts, who's going to festivals. The stuff that has been driving parking has really dried up. I'll give you an example. I don't know, what's our time like here, Alpesh? I don't know if we're going too long or
Yeah,
not.
we still have about 5 minutes or so.
All
So
right, all
yeah,
right. I'll be
continue.
quick. I'll be quick about this then. So, and a lot we offered 3.7 million for in like March 1st of 2020. We offered them 2.54 here last week, a week and a half ago. Um,
Wow.
right, correct. Yeah, wow is correct. But even then, it's still not even covering taxes right now. So this
No.
is, yeah. I mean, so this went from generating hundreds of thousands a year to now it's not even covering taxes. We expect that at some point to come back, but I mean, that's what's happened in parking in general. But what we have not seen, and the seller did not accept our offer. But what we have not seen is a corresponding decrease in asset prices relative to their net income. So we've seen net income just fall off a cliff, and then prices have remained the same. So we put a big pause on our purchasing just because it just doesn't make sense. I can't underwrite that.
Right.
I can't underwrite it, and you can't get loans on it. So we're at a point now where we're just kind of, and I think a lot of people are in a lot of different asset classes going, gosh, is there going to be a reset here? Is there going to be some adjustment for, less operating revenue? I don't know, but that's kind of why we are on the sidelines, if you will, waiting. We'll go back to buying as soon as it makes sense.
That's awesome. Let's take a quick break, Sam. And after the break, we'll go through same 5 questions I ask every guest.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Sam gave us pretty good idea about how and why to invest in parking lots and garages and why he's not investing in those parking lots right now. So thank you, Sam, for that. Are you ready for 5 round?
Let's do it.
Let's go. Would you be changing any business or investment strategy after this pandemic is over?
Absolutely. And I think that's one of the things that has helped me throughout the years is just being able to pivot. So having my hands in a lot of different asset classes already has been fun. Focused primarily on parking in the past, but then really saying, all right, look, given that this particular asset class isn't doing what we need it to do, what else do I need to focus on? So being very opportunistic in boat and RV storage, and of course, multifamily is kind of a stable, a workhorse, investment class anyway, but still looking at that. And then also really looking at more into the low income housing tax credit properties, simply because I just see that demographic growing, unfortunately, in our country.
Yes.
So that being said, yeah, very, very much so, especially with the wild money printing and things like that. We're making a lot of people very poor by printing this much money. And so I see that class growing, and that pains me, but at the same time, I'm willing to I want to get in front of it and be prepared for that.
It makes sense. And I agree with the money printing. I was reading somewhere that the highest number of millionaires and billionaires were created in last year, but it created the largest disparity, right? Because now the rich got really richer, right? And poor got poorer because they couldn't work. So, and of course, then on top of the money printing, they are going to keep getting poor.
They are, sadly, and because of the money printing, their money is worth that much less. So savers become losers. So even if you are saving, or even if it's bad. It's bad all the way around. So
I agree. Favorite real estate or finance or any other related book?
Man, I would say that Mastering the Market Cycle by Howard Marks is probably an extraordinarily insightful book. I'm kind of a numbers nerd, but at the same time, I love the psychology that goes into market cycles and, what drives what. And so he really breaks down how the normal investor piles in and buys at all the wrong times.
Yeah, it's on news, right? The news, it's late.
he spends a lot of time. Yeah, he spends a lot of time doing psychological analysis of why investors do what they do. And I go, that's a brilliant book, and kind of helps frame a lot of the things that we're seeing right now that make me kind of scratch my head and say, I wonder. So that's a fun one.
That's great. Any tool or website you recommend or you cannot live without?
No, not necessarily. I wish there were. I mean, right now there's nothing major tools wise that I say, man, that's something you got to have. No, I'm sorry. I don't have anything for you on that.
Any advice for beginner investors?
Yeah, this goes back to the same thing I said at the very beginning. It's 3 steps: learn, take action, and then find your team. I mean, it's just three things you got to do. And for me, I'm a ready, fire, aim guy. And so I really stress the action part of that, because, man, I know a lot of people with a lot of knowledge that aren't doing anything, and it drives me nuts. Like, okay, well, I don't want to talk about this anymore. Just go do it and fail. And you just got to make sure you succeed more than you fail. So that's it, man. Learn, take action, and build a team. And that's it.
That's a great advice. And I keep telling this to my listeners, my friends, that there is so much out there that you get more confused by grabbing all that knowledge, bigger pockets, the podcast, these, that. But and a lot of books, right? In last 5 years, tons of real estate books have been written. When I started in 2015, no podcasts were there. And of course, you started before me, right? There were no books. You just had to learn on your own. And I failed. But as you said, you got to succeed more times than you fail. It's like VC companies investing in startups, right? They make
Right.
sure that they become successful and they hit it big.
Right. Right. Yeah, absolutely. Well, who was it? Who was it? The guy that said, I'm not judged by the number of times I fail, but the number of times I succeed. And the number of times I succeed is in direct proportion to the number of times I fail and keep on trying. Who was that?
Yeah, I'm trying to remember some big, one of
Yeah,
those
he
big
was a real
CEO.
estate guy. Yeah, I
Yeah,
can't remember. But anyway, I always remember that
yeah,
quote, and I'm like, yeah, that's right. So I just need to keep on failing, so and then my success will come. So there you go.
of course. How do you give back?
Yeah, two ways. So one, the we've talked about this at the beginning of the podcast. The three kids in our home. That's a big heart issue for us. Is giving back the children. That this will blow your mind. In that there's again 5, 3, and 9 months. All three children added 10% to their height and their weight in the first 30 days of being in our home.
No way. That's
Absolutely.
amazing.
It's blow your mind growth.
Is amazing. Yeah.
Yeah. And so, I mean, the 30, she's 38 months, so 3 years old, is still wearing 18 to 24 month clothing just from malnourishment.
Right.
But just growing like a weed. So that's really,
amazing.
really fun
Yeah.
to see kids getting
Kudos
stronger.
to you and your wife.
Yeah.
Definitely.
Yeah. So that's one way. And the other way is we actually own, and this is another fragmented industry we could talk about on another podcast, is a laundromat here in Memphis. And it's really my wife's kind of outreach initiative in our little enclave. We live in a poor socioeconomic area on purpose. But like during the coronavirus, things like that, we given away laundry. We had a lot of families in need. It's become kind of its own little like the neighborhood loves the laundromat, which is really funny for a poor area of the city to really rally around something like that, because it's like, that's our laundromat. That's where everybody goes. It's the social spot, but yet people really find great value in that. So there's reading rooms in there. There's families reading kids to books. There's just kind of trying to find redemptive ways to spend time when people maybe aren't necessarily enjoying, let's go to another dumpy laundromat with bad lighting and, sketchy people in the corner. So it's brightly lit. It's, well painted. So that's also a fun way for us to really give back to the neighborhood.
Nice. How can my listeners reach out to you?
Yeah, you can go to brickeninvestmentgroup.com. That's BRICKEN, brickeninvestmentgroup.com. You can reach out to me there. You can hit me via email at sam@brickeninvestmentgroup.com. I guess both of those are probably the fastest and easiest ways to get in touch.
It's awesome. Thank you so much, Sam, for your time.
Thank you, Alpesh. Had a great time being on.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!